Steel Dynamics Incorporated, founded in 1993, is one of the largest domestic steel producers and metal recyclers in the United States, with a significant presence in the steel industry characterized by a diversified portfolio of high-quality products and enhanced supply chain solutions. IT is a member of the Fortune 200 and S&P 500 Index. Financial metrics. Share price, $136. Market cap, $21.6 billion. Price-earnings ratio, 9.8. Dividend yield, 1.36%. Debt, $1.6 billion. Net income, $2.5 billion. In 2023, the revenue was $18.8 billion, which is the second highest revenue ever. The cash flow was $3.5 billion and the earnings per share was $14.64. They also bought back 8% of the shares outstanding by spending $1.5 billion. They have a circular differentiated operating model which focuses on optimizing cash flow through three divisions: the steel operations, metals recycling, and steel fabrication divisions. They are the fourth largest North American steel producer, which contributes to 65% of their revenue. Their steel operations are low-cost, modern, and efficient, and focuses on value-added products. Their steel operations have a secure supply of high-quality scrap from their metals recycling business. They are the largest metals recycler in North America, and this contributes to 10% of their revenue. The steel fabrication business is the second largest North American joist/deck producer. This provides a natural hedge in a low steel pricing environment. They have a track record of successful strategic growth and shareholder value creation. Between 1996 to 2022, they did more than $5 billion of mergers and acquisitions, invested $7 billion in organic growth, and returned $7 billion to investors. Between 2012 to 2022, they increased their steel shipments from 5.8 million tons to 12 million tons and increased their net income from $164 million to $3.9 billion. Their market cap has grown from $3 billion in 2012 to $21 billion in 2024. They also reduced their leverage from 2.9 times to 0.2 times. This suggests a great growth company with great leadership. Since they acquired the Columbus flat roll mill, they tripled their cash flow from $950 million to $2.8 billion. They have also invested in growth projects. They invested $1.9 billion in a new steel mill in Sinton, Texas, with 2 additional value-added coating lines to start in 2024. They have also invested $600 million to add 4 new flat-roll steel finishing lines to ramp up in 2024. Totally, this will increase their steel manufacturing capacity to 14 million tons with 16 million tons shipping capability. It will increase the EBITDA by about $475 to $525 million per year. They are also investing $2.7 billion in building a 650,000-ton state-of-the-art flat-rolled aluminum mill and 150,000-ton satellite aluminum recycling slab centers. This will contribute about $600 to $700 million in EBITDA, and they expect to recoup the investment in 5 years. They also plan to invest in renewable biocarbon to reduce their emissions. The facility's initial production capacity is expected to be about 228,000 metric tons, with an expected investment of $260 million and start production in the second half of 2024. This will reduce their carbon emissions at their steel mill by 35%. They take emissions seriously, and all their 7 steel mills use electric arc furnace technology, which uses recycled scrap metal to produce new steel. 82% of the materials that they use are recycled. Their steel mill's energy usage is 75% less than world averages. They made $11 billion of free cash flow in the last 5 years, and they used this to strategically grow with $4.9 billion of capital investments and returned $4.1 billion to shareholders through share repurchases and $1.1 billion in dividend. In order to protect the U.S. steel industry, Donald Trump introduced tariffs on Chinese and European steel in 2017. This has not only protected the U.S. steel industry, but also helped them to reduce their debt in 2022 when steel prices spiked due to supply chain problems. In spite of this, there is still concerns about unfair Chinese dumping of steel into the U.S. market, and President Biden is considering import tariffs on Chinese steel and aluminum. If passed into law, this will help increase Steel Dynamics' cash flow by increasing steel and aluminum prices. The current high energy prices in Europe make steel making unprofitable as steel making needs lots of energy. This gives the U.S. steel makers a distinct advantage due to abundant availability of natural gas from shale. This would mean in the future, if there was escalation in geopolitical tensions, then there is a possibility that American steel will be exported to Europe. Steel Dynamics mills are strategically located for this scenario. Overall, we have a company which has grown significantly over the last 20 years through acquisitions and organic investments, producing significant cash flow and enhancing shareholder returns through buybacks and dividends. They are trading at a low price-earnings ratio as well. They will also benefit from their capital investments from 2025 onwards. They have low debt. All these attributes make Steel Dynamics a Muffett stock. We are looking for an entry into this stock. Steel Dynamics is near an all-time high with low price-earnings ratio, unlike some of the tech sector which are at significantly elevated prices. The 50-week moving average is around $120. This will be a good place to enter. We are a little bit cautious, as we are expecting a downturn in the economy. With the Fed rates near highs and oil prices and other commodities are also rising. This gives the Fed less room to cut to stimulate the economy. If you look at the lumber prices, it is in free fall, suggesting that the high rates are affecting the housing market. As a significant portion of American wealth is in the housing sector, any significant downturn in this sector can have a big impact on the overall economy. Also, the coming U.S. election and geopolitical tension means that we have to be careful. We think that when Steel Dynamics falls to around $120 in autumn, we would be better able to assess the economy at that time and then decide on the entry price. But we like this stock very much, and we would add to our portfolio in the right situation. We will produce a new video on options on Steel Dynamics when it reaches $120. Please also watch our video on economic wars. This video outlines the reasons as to why we like steel stocks in the U.S. We hope you like this analysis. Please like, share, and subscribe. Thank you.